Adobe earnings are out for ticker symbol ADBE, so let's do a top-down analysis. We are now sitting at a market cap of $144 billion, a PE of 30, and a free cash flow yield of about 4%. Couple that with repeated consumer demand and a wide economic moat, and we have a Fortune 500 company. So why has the stock declined over 50% from those all-time highs? And should we be buying into the pullback? Stick around to find out as we're talking about that and more in today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today, we're going to analyze Adobe's business and earnings results. We'll start with the financials, the top line, the bottom line, the balance sheet, cash flows, etc. And finally, we'll end up concluding with an evaluation of this business using our intrinsic value calculator seen on screen, which will identify whether Adobe is a value investment or not. If you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. And as always, we'll be analyzing this business within 5 minutes. So let's jump into it. So starting here with our earnings release, we can see right away, Adobe reports record revenue in Q3 fiscal 2022. So that's a good thing. They said this is fueled by their groundbreaking technology, consistent execution, and ultimately that led to a record quarter. Additionally, they also announced that they will be acquiring a business called Figma, which ultimately should help them grow even more in the future. And so for Adobe here, despite the economic challenges, they did produce record revenue, and they said that this demonstrates their products are mission critical to individuals and small businesses. So a lot of positives to discuss here from the executives, but how does it actually translate to the financials and throughout the business? Well, let's actually jump into the financials now to find out. And starting here with our statement of income, we begin with our subscription revenue here of $4.1 billion, up from $3.6 billion 1 year ago. Product revenue also slightly ticked up, and so did services and other, and that totals up their revenue to about $4.4 billion versus the $3.9 billion last year. Again, alluding to that record revenue. But here's where investors really like what they see with Adobe's financials, and that's their cost of revenue here of $546 million, which is very low, and it contributes to their high gross profit margins here. So they're left with $3.9 billion. And then when we deduct for our other expenses here, SG&A, research and development, etc., their total operating expenses come to $2.4 billion. So you're left with $1.4 billion in operating income. Unfortunately, the kicker here is that last year we also had about $1.4 billion in operating income. So it's not too much movement here on the bottom line. But when we look at this from a 9 months perspective, we can see some nice improvement here. And that's something to look forward to as an Adobe investor. Now let's jump into the balance sheet here to see what's going on with their liquidity for Adobe. We have cash and cash equivalents here of $3.8 billion, plus let's call it about $2 billion in short-term investments. So let's just round up and say they have about $5.8 billion of cash sitting on the balance sheet. We will also take note that the goodwill does take up a sizable portion of their total assets, but it's nothing to worry about at this point. Let's look at the debt figures here. Short-term debt, we have $500 million. Long-term debt, we have about 3.6. Let's just call it $4.1 billion to be safe on the $5.8 billion in liquid cash. So yeah, definitely not a liquidity issue here for Adobe. Their balance sheet looks amazing, and this is what you would want to see from an investable business. Now, let's jump into the final accounting statement here, the statement of cash flows. We drag down our net income figure of $1.1 billion, add back in our non-cash costs, and we're left with cash provided by operating activities of $1.7 billion. We deduct our capex figure here, which is very small here, of $125 million. So let's just say we have about $1.5 billion in free cash flow to reward shareholders. How do they do that? Well, right now they're focused on repurchasing shares. They don't currently pay a dividend or anything else like that, but as we saw at the top of the video, they are making acquisitions to further grow their business, and I am not mad with this at all. The best time to repurchase shares is when they are at lows, and as you saw, the stock is down 50% so far, so they're technically buying shares at a 50% discount. This is ultimately going to really help the business once we do see a rebound here. And just before we jump into the calculator here, let's take a look at our earnings per share figures. As you can see, for the 9 months ended perspective, we did come out with about $7.57 in earnings per share. And if we extrapolate this out, we can probably assume that we will come in for the next quarter with another $2.50 in earnings per share to make it about $10 in earnings per share by Q4. That being said, analysts are projecting that they'll come in with about $13 in earnings per share. So let's be conservative here and just put in that $10 figure. If we require a 10% return, they currently do not pay a dividend, and we expect that their earnings per share continues to grow at 34%. I mean, let's actually bump that down to, let's call it 25% for the next 5 years. And then that drops further down to, let's just average out at about 16% on a 20 PE. The stock will be worth $468 per share on an average basis. Now we are sitting at a current price of $309 per share. So you'd be getting some significant upside. Now, in the best case scenario, let's say we actually can stick to 34% per year for the next 5 years. That drops down to 25% for the 5 years after that on a 25 PE. We'd be looking at over $1,000 per share for Adobe. And finally, in the worst case scenario, the new acquisition turns out to be a bust. The business faces further challenges. We're only able to grow revenues at about 10% for the next 5 years. It drops down to about 5% after that on a 15 PE. The stock would be worth $124. Now, historically, Adobe doesn't really trade as low as 15 PE. It's probably in towards 25 as one of the lower multiples here. That would be about $207 per share, but still we would see significant decline in the stock price, probably about at least another $100 or so if the growth slows. And that's ultimately the risk and reward here for Adobe. As you can see on screen, our expected case is for Adobe to get to about $468 per share, assuming they can grow their earnings per share figures from these levels, even though they're at record high revenue right now. If we do see further challenges here and a slowdown with Adobe, as we can see here, the stock is going to fall closer and closer to that $200 figure, as we do have some support in and around 250s. If that fails, we'll be down towards that margin of safety level of $200. And obviously, if we do see a resurgence in growth here back up into those mid 30 levels, we will see the stock absolutely tear up through all-time highs, which would be a great investing return. But ultimately, that is the analysis here for Adobe stock. Please do your own research and due diligence when it comes to your investments. If you enjoyed the video, please leave a like and subscribe, and I'll catch you on the next one.